Gold, again, doing exactly what I wanted to do, which is consolidating. Not much to update here. It's just doing what we wanted to do. Eventually, the probabilities tell us that this move will push up. Could it pull back a little bit first? Yes, it could. You just want to see it hold this level around 1900, 1880. Next up, let's quickly look at Bitcoin so you guys get your Bitcoin chart update here. Bitcoin doing the same general thing as gold, frankly. It's just a little earlier on. It's beginning to consolidate here. I'm still short this position. I'm still looking for a little bit more of a pullback. Yes, I'm in the money about $1,000 on it, but I'm still looking for a little bit more. I'd still like to see a little bit more like this, and then expect maybe a move up off of that. So I'll keep you guys posted on that.
Why do CME gaps in Bitcoin matter? Here's the scoop. These gaps emerge in the Bitcoin futures market when there's a significant difference between Bitcoin's closing price on Friday and its opening price on Monday. It's like a weekend hiatus for CME while Bitcoin keeps trading. Why does it count? Many think these gaps tend to be filled over time as Bitcoin's price swings back to the gap level. It's all part of Bitcoin's natural cycle, driven by its inherent volatility and market trends. Take historical data, for example. There was a gap at $3,500 during a previous cycle that was never filled as Bitcoin rocketed to new highs. And now in the current cycle, there's another gap at $20,800. Whether it gets filled depends on a cocktail of factors, including market sentiment, historical patterns, and Bitcoin's unique whims. Predicting Bitcoin is like predicting the weather, challenging but fascinating. Here's the deal with Peter Schiff, the man not impressed by Bitcoin's rally. He's saying once the SEC gives the green light to a spot ETF for Bitcoin, the party could be over. It's like the climax before the fall. He even predicts a sell-off before the SEC's approval. If it's rejected, though, it might not be all bad for Bitcoin. Some folks might hang on to their Bitcoin hopes despite bad news. In essence, it all hinges on what the SEC decides. Sounds a bit like a poker game, doesn't it? This is a classic case of high hopes and big falls. Over 10,000 investors were banking on a Bitcoin scheme that promised 35% profits every 2 weeks. But surprise, the scheme pulled the plug and disappeared. Turns out, some of these investors could have earned Bitcoin for free through Bitcoin faucets. Instead, they went big, and now they're hurting. This kind of story shows that easy money often leads to heavy losses. Here's a word of advice. If it sounds too good to be true, it probably is. Bitcoin, this digital wonder, was created back in 2008 and released to the world in 2009. It's a bit like gold. There's only so much of it, but it takes time to mine it all. Bitcoin experts predict it'll take around 120 years until the year 2140 for every single Bitcoin to be mined. Every 4 years, the reward for miners halves, making it harder and slower to get new Bitcoins. This means Bitcoin will have to rely more on transaction fees to keep miners interested. It's like a marathon, and the finish line is still a long way off. In the world of cryptocurrency, one thing is sure, it's a roller coaster. So always buckle up and prepare for the ride. Let's continue our discussion.
We got some key economic data out, as we can see here. Core PCE. Now remember, the PCE numbers are the favored inflation numbers by the Federal Reserve. So it's the one that they look at the most to determine whether or not to kind of raise rates or not. So right off the bat, the core number previous was 0.1. The forecast was 0.3%. We came in at 0.3%. So that one came in alignment. So no big deal there. The next one was the price index. So the PCE, meaning everything included. Previous was 0.4. Forecast was 0.3. It came in a little bit hotter than expected, but only by 0.1%. So not overwhelmingly hot, just slightly. Core PCE year over year, 3.7. Forecast was 3.7. PCE year over year for 3.4. So these came in exactly in alignment. The next one, this is the one that I think makes the difference, folks. And again, these are the next two numbers. So normally the PCE data would be the most important. But in general, this came in alignment, right? For the most part, aside from just a slight miss on this one, these all came in. The personal spending. Now, this is people spending. So number one, it jumped pretty dramatically. Expectations were 0.5% increase in spending. It went to 0.7. That's a pretty big jump, in fact. Now, the kicker is this, guys, right? The kicker is this, is that is telling me something. It is telling me that people are being forced to still spend, or they still are willing to spend, but we know credit card debt is skyrocketing. We know defaults are increasing. So it's telling you that, to me, there's a consumer that is still willing to spend, but they're using debt. They're jumping on that credit card bandwagon to make this spending occur. The next one is the best one. This is the best, at least for the Federal Reserve. Personal income. Now, again, it's not necessarily the best for you and I. We want our income to go up, but expectations were 0.4%. It came in less. So income is starting to drop. Spending is actually going up. We're starting to get a disparity here. And this overall is not good for the economy. So again, for you and I and everyone out there, that's not good. The Federal Reserve is probably saying, oh, this is good because it will bring eventually down inflation. All right, so again, just to understand this number here, these two numbers, personal spending and personal income, those are the key ones for today. For me, those again are positive for risk assets because again, it shows maybe the Federal Reserve won't have to continue to hike. All right, let's check out what the S&P is doing here. This is the pre-market data. Overnight, we saw the S&P rising in the overnight. This morning, we started to fade. Those numbers came out, and we have continued to move higher. So we're seeing an equity at S&P 500 rallies thus far after yesterday's nasty day. Now, this is where it gets fun for me, folks. We kind of took care of all the numbers, all that crap like that. Now, I want to get into the charts. And again, this is kind of charts, but I want to show you what I mean by this. Let's flip over to the daily chart. Now, remember, I gave you guys a target price on the S&P 500 or the spiders. Where did I say the big level was going to be? And the big level was going to be at the 412 level. The 412 level on the SPY. Why? Because again, we can clearly see pivot point, pivot point, pivot point, pivot point right here. Therefore, we broke this upsloping line and we would go to the next pivot point right there. Now, if you're a trader and you bought that level, right now you're sitting pretty because the SPY is up about $2 off of that level. All right, so again, yesterday it pierced. Now you're getting a little bit of a technical bounce. So again, listen, charts are not perfect. I am not perfect. I make mistakes, but I play the probabilities. All right, again, you know, if you're in the casino, you try to play the probabilities in the casino, but inevitably you lose, right? That's just the nature of blackjack, roulette, and all these other things. However, with the stock market, with using charts to your advantage, you can put the probabilities in your favor, which means that if you follow the rules and you know the rules, you can ultimately make money as a trader and an investor. But again, discipline, no emotion, which is part of discipline, and understanding the levels is of utmost importance. Okay, so where could we go? Let's talk about a bounce in the stock market. Then we're going to get into earnings, obviously. We saw Amazon report after the bell yesterday. So if we bounce here, the logical target for a bounce is going to be back to the scene of the crime around 428 to 430 on the SPY. All right, so again, right now we're back to about 414 and a half. The best case scenario is a move back to this scene of the crime, which is this trend line. Again, I could go back further and show you where it connects, but we know that this level right here is your target zone on the SPY.
Mark Cuban, a Shark Tank investor and the owner of the NBA team Dallas Mavericks, has shared what he thinks crypto is really about. Crypto is still waiting for its Instagram moment, the billionaire said, noting that what crypto is missing is that one application that Grandma really wants to use. The U.S. Securities and Exchange Commission, SEC, reportedly wants Ripple to pay a $770 million penalty for violating securities laws. Crypto lawyer John Deaton explained that the securities regulator is pissed and embarrassed after it lost several legal battles against the crypto firm. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.